Hi, I'm Richard. I'm here with HFM and Sham from FX Cartel. Another packed house, it looks like, on Seminar Wise. Looking forward to giving you some thoughts and insights with regards to fundamentals and how to incorporate it with your trading. So,
What more can I say? Hey, what more can I say? I can just say that HFM, yeah, it's very good broker, and yeah, that's it.
Aging this because it's not all the time, but gold has been so bullish.
HFM has got over 16 industry awards.
To trade, you don't have to have a certain type of bank account.
PCE is when you'll see the biggest move with PCE.
So I just want to find out, how is everybody doing after the break? Do y'all have more life, more energy? Are y'all good? Y'all sound tired. Lungs are full, stomach is full, brains are full. Are we good? Oh, no, definitely the lungs, you know. Trading accounts are empty. Pockets needs to be full. Sham? All right, firstly, I want to say welcome back, everybody. I hope you had a good break. We are now going to be handing over to Richard, who will be, in fact, talking to us about the fundamentals of trading as well as the market analysis. Can we have a round of applause for Richard? Very good.
Good afternoon, guys. Thank you. What I'm here to basically share with you guys is the use of fundamentals with your trading. How many of you rely wholeheartedly on technical analysis? Be honest. All right, so maybe now's the time to start to incorporate the use of fundamentals. Fundamentals is not just limited to data. Fundamentals is, yes, data, your NFP, CPI, PPI, PMI, PCE, as well as all your jobless claims and continuing reports and everything else that are slightly smaller, but your 6 main high-impact news events are your NFP, CPI, PCE. And the reason I use the fundamentals is because I believe data doesn't lie. You can view your technicals, your setups, everything on a Friday before the NFP. It will probably tell you gold is going to buy. The data comes out and sends gold tanking to the floor, as we saw yesterday with PCE, personal consumption expenditure. It's obviously the Fed's preferred metric for gauging inflation. So with the PCE data that came out yesterday, it cemented that there is no need for an immediate interest rate cut for the short-term future. So as a result, gold will tank. Whenever there's a rate cut, gold goes bullish. So just bear with me. And the reason I use fundamentals is because it's not rocket science. If you're not sure how it works or how it's going to impact the markets, I use investing.com always for my source of information and lifetime release of the data. So on Friday we had, excuse me, forecasted figures, as we always get with the NFP or PCE or PMI. You always get a forecasted figure versus the actual figure. Now, we see some price action and movement whenever there is a discrepancy between the actual figure versus the forecasted figure. And the rule of thumb is, any reading higher than the forecasted figure is construed or seen as a positive for the dollar. What does that mean? Any asset pegged to the dollar is going to work inversely. If it's positive for the dollar, gold, silver, oil will become bearish. And I just want to show you exactly in real time. Year on year, 2.8, and then obviously your price index, which is obviously 2.6. So as you can see here, yes, was it yesterday? Yeah. We had quite solid data being released that all favored the dollar. All the figures in green are supportive and positive for the dollar. So as a result, in theory, instantly gold probably would have reacted to this data, and we can go and check on the charts. here at 3:30. There we go. There's a bearish candle here when the report first came out. But obviously there were still some bulls in town leading up to the US Open. 4:30, they process, digest the data. Yeah. 4:30, still showed a little sign of bullish momentum. Now the data kicks in, we get a big bearish candle. The data doesn't lie, especially with PCE. It usually comes in on par, but whenever there is a discrepancy on PCE is when you'll see the biggest move with PCE. Other than PCE, the best one is NFP. But when you're using data, it's not for your scalping, it's more of your swing trading. So you can generally hold the position for either a day, 2 days. With NFP, you could have held it for a week from the last NFP before it started to turn back bullish. But obviously, when it comes to fundamentals, we also have to pay attention to geopolitical tensions. And we currently have a lot going on, especially in Iran. And the consensus for myself was that maybe there may be some escalation this weekend. The reason being, the US has already applied to the UK to use Diego Garcia, one of the islands, as well as a US military base to launch their attack on Iran. And the UK has already said no. So we now know the US intention is to strike Iran. So I was hoping maybe this weekend gold would fly. But this morning we got some more news in the sense that Donald Trump and his tariffs that he got away with applying for the last year are illegal. The Supreme Court ruled this morning, early hours, 1 o'clock, that they are all illegal, and we now have the issue of some $200+ billion in tariffs that need to be refunded somehow, which he says he's going to fight. But anyway, as a result, there is no tariffs, so we'll probably see the indices fly on Asia Open Monday morning, because indices, again, companies have priced in the additional tariffs. They're now null and void, so it's going to boost profitability for these companies listed on the NAS, the US 30, and the S&P. How it's going to affect gold, time will tell. I'm holding gold myself, speculating that there would be military conflict in the Middle East. We now have tariffs that are ruled illegal, so most of gold's bullish run last year was due to tariffs. So are we going to see a correction? There's no need for safe haven demand of gold now that tariffs are irrelevant. So will we see gold melt Monday morning? I hope not. I'm holding a buy. So an interesting landscape ahead, but always try and use and incorporate fundamentals. I do have another chart, I just can't find it right now. I plotted every NFP from last year on an hourly chart, and you can leave it for a week after the NFP. I've got it all plotted out. Fortunately, I can't show it to you, but learn to incorporate and use the data from these events. Someone asked, what's the best asset to start trading with? Maybe the best thing is to play around with some reports and wet your feet there. You're not going to be reliant on what you're looking at with the candles. You're going to be watching the data. If the data comes in above the forecasted figure, I know gold will sell. It may pop up a little bit. It's not as easy as it used to be because they now release other reports coupled with the NFP. So we have the unemployment rate, we have hourly earnings, we have the NFP, we have the private non-farm payroll, along with a few other reports. So it's not as easy as it used to be to trade reports, but you can still trade them confidently if you know what the data is telling you. And I use investing.com, and if you want to start playing around and you're not sure what the report does, all you need to do is click on the actual report on investing.com. Wrong one. It usually does tell you here, but they're starting to play around with the wording as well. Here, it tells you a higher than expected reading should be taken as a positive for the dollar. So anything that's positive for the dollar is going to have be bearish and negative for any asset that's pegged to the dollar. So this is an easy opportunity to make a trade. Yes, you may endure some leverage cutting, which most brokers do apply, not just HFM, and it's there for your own protection. Cutting the leverage should hopefully, if you're free margining, save you some money because of the volatility in the marketplace. But if you're using the data, your leverage gets cut, and you trust the data, you can actually ramp up your lot size because you're trading with a bit more confidence knowing what the data is going to do. And that's where I get my biggest success, is trading the big news reports. I trade in between sometimes with technical analysis, but I rely wholeheartedly on fundamentals. Because, as I say, data doesn't lie, and it will paint a bigger picture. So there's no need for interest rate cuts. Demand for gold will probably go down unless there's any further geopolitical tensions. We still have a gap with gold that needs to be covered, somewhere around 4,345. So if you're looking for an entry on gold, once that gap's closed, enter from there. Because the forecast for gold is 6,000, some 7,000 by the end of the year. So yeah, that's why all I have to share. The use of fundamentals is imperative, and you need to embrace it with your technicals that Sham and FX Cartel will teach you, especially if you get more into it. Your chart patterns, your candlesticks, what are they telling you? They will help you during these reports, but if you want to trade with a bit more confidence, use the fundamentals, understand what it's doing, painting a bigger picture of the US economy. Any questions? Yeah.
Do you look at COT reports also as you say you look at data? Do you also incorporate COT reports?
Yeah, I try and incorporate as much data as possible. As I said, like now, especially in the US, the labour market is very robust. The last NFP a week ago, as I said, was solid data. Average hourly earnings were above the forecast. Unemployment rate dropped. Jobs created left, right and centre, not just in the government sector, but in the private sector. So this data will probably start to kick in wholeheartedly from now until the next NFP, especially now the threat of tariffs are gone. So yeah, data is your friend. And as I said, it's not rocket science. If you're not sure, there's a whole million of reports. There's still new reports that other people probably haven't found. There's smaller reports as well, like October last year, the Challenger job cuts. It's a one-star event. But in October, it rocked the markets. It highlighted the biggest job losses in America in 10 years. And most of the 150,000 jobs lost, was lost due to AI. But again, we're still showing positive labour statistics with the NFP. So although there was a massive job loss in October, and it came about, no one really knew what happened in the market, just gold went boom, out of nowhere, and then everyone goes, it's the Challenger job cut. A one-star news report, no one pays any attention to, but has the potential to rock the markets. So always pay attention to the reports. My daily practice is I get up, I check the news, I check the dollar index. Is the dollar strong today or is it weak? If it's weak, it's a good market, buying conditions for commodities. If it's strong, it's probably selling of commodities, because institutions buy on a weaker or a stronger dollar. So pay attention to the dollar index, what's going on in the news, and that's all part of your plan. When you get up, what do? I look for opportunities, firstly in the news, geopoliticals. I check the dollar index, how strong is the dollar, where there may be some opportunity, and I go from there. And I have a plan, daily profits, targets, as well as losses. And yes, I don't win every trade. I'll put my hand up. But you know what? I learn from where I made a mistake, and generally try not to make the same one again. But the thing to this industry is consistency, commitment, and perseverance, and the willingness to learn and stick to your targets. The minute you break away or deviate from any targets is when you start to feel the pain, because you've sucked into revenge trading, trading for the sake of trading. There's no setups, no nothing. So sometimes it's better just to sit back and wait for something to drive the markets in the way of data, in a report, or geopoliticals. A lot of us are speculating the last 4 weeks, holding positions every weekend on gold. We've had 4 gappings up. 3 have been covered. The first one at the beginning of January, all the way down at $4,345. We come close to covering it, but then it pulls away. Signs are there it's coming to that gap. And if ever you want a better entry for gold, when that gap gets closed, take the buy back up, because it probably won't go any further down than that. And all the analysts and experts forecasting 6,000-7,000 by the end of the year. Maybe it'll happen sooner. It just depends what's going on. The world is a different landscape to what it used to be 5 years ago. We have a power struggle between China, US, and Russia holding on, trying to flex their military might, but they're all eyes on China, US. Greenland wasn't a security issue, it's a raw earth minerals issue. America was sleeping and China dominates. So that's the real reason behind Greenland. And also Venezuela. America took Venezuela to control the oil because Venezuela is supplying China and and Russia. Why does he want to get involved in Iran? He wants regime change as well as stop the supply of Iranian oil to China. Donald Trump knows what he's doing. He wants to cut the hands off of China from getting cheap oil from other countries such as Venezuela, Iran, and everything else. And Greenland was also not just about security, raw earth minerals, as well as North Sea oil. He says the UK is falling behind in exploiting the North Sea oil. Greenland's very close to those North Sea oil fields. So sometimes it's not all what it seems. So pay attention to the fundamentals and geopoliticals. It will help you immensely going forward. They're free signals, basically. Any geopolitical, gold, safe haven, Swiss franc, yen, will all turn bullish in times of conflict. Yeah.
Do you think AI is having such a huge influence, especially on the fundamental side? Because I see a lot more traders are leaning on AI making decisions for them. Do you think that is going to steer the market maybe in a way in the future?
Yeah, a lot of people have even tried it myself. It's there to be used and exploited. It will help you. At the end of the day, it does still require some human input to tell it what to do until the time that it can actually start to foresee what may be happening in the future, but ultimately it does need continual updating, especially in this industry. I would think it probably needs constant updating because market conditions change. But I was going to mention something, I've slipped my mind, AI. Also, yeah, if you're trading as well, fundamentals. If you're trading, for example, the NASDAQ, the US 30 or the S&P, you need to be aware of earnings season. Earnings season is when all your companies listed on Wall Street release their quarterly financial report. If it's a bad report, it can have the potential to drag down the indices, especially if it's one of the Magnificent Seven. These companies have a market cap valuation of over $1 trillion. If they have a bad report like Apple and they drop 5%, I can guarantee you the NASDAQ will also be crashing. So if you're trading the NAS or the indices, be aware of earnings reports and when certain companies release their reports. So some of them, there's 3 of them on one day. I think Facebook, Amazon, and a few others. If all 3 of them have a bad report together, that index is not going to be green at all. It's going to be red. So yeah, that earnings season's 4 times a year. And again, you can get it from investing.com, the HFM economic calendar. They're all there to help you. Okay, and also it's also another opportunity. I dabble with stocks when it is earnings season, and it's certain stocks that I pay attention to, namely Pepsi, Nike, and a few others. But that's again through research and what's going on the back end of these companies. Pepsi looks like a fizzy drink. They're actually quite a healthy brand now on the backside, believe it or not. But yeah, likes of Nike impacted by tariffs last year quite heavily. But yeah, if you want to dabble not away from the usual suspects of gold, NASDAQ, and the indices, certain times of the year, it's good to pay attention to stocks. They generally turn bullish and rally for 2 days prior to the report coming out. Then if it's a good report, it will continue further up. If it's a bad one, your losses are sort of offset because you've gained on the lead up to the report coming out. Yeah, anything else? Any other questions on fundamentals or? Okay, that's all from my side.
Live from Johannesburg. Welcome to the FS Cartel Podcast. Team Shine in the charts. Yeah, we move with precision. Trading made simple. Every episode's a vision. VIP signal is free. VIP signal is free. When you sign up, tap into the mission. FX Cartel. Level up. Trade smart, make progress. First trading launch in South Africa.